Charlotte McLeod with the Investing News Network, and here today with me is Brien Lundin, editor of Gold Newsletter and host of the New Orleans Investment Conference. Thank you so much for joining me online today.
Great to be with you again, Charlotte.
Yes, great to be speaking with you. And of course, as we usually do, we're going to start by talking about gold. When we spoke last fall, you emphasized the positive long-term picture for gold. And I think most people do still agree that in the longer term, it's looking good for gold. But this year we have seen it stumble a bit. So to start off, if you could let me know what you think is going on in the gold market right now.
Well, right now, and I agree, the long-term picture is still good, and I'm still very bullish and positive on that. But for gold, its near-term future is much more uncertain than its long-term future. I think we can all be confident, fairly confident, that the gold price is going to be much higher 2, 3, 4, and 5 years down the road. But it's 2, 3, 4, 5 days ahead that it's hard to tell because the market trades on really news in regard to central bank policy, what the Fed is going to do next. And right now, the Fed is in a period of floating some trial balloons out in regard to tapering, potential rate hikes down the road, and it's really shifting its messaging. And in this kind of a period, we typically see weakness in gold and silver. The good news is once we see some actual action in regard to Fed tightening, that typically marks a bottom in the gold price and the silver price as well, because the speculators having bought the rumor of Fed action, then sell on the news, and that releases some of the selling pressure, some of the shorting pressure on the metals. So that typically marks a bottom. In December of 2015, it marked a very significant bottom in the metals, and we had about a 6-month rally from those levels that was very profitable for investors in the sector. I think we're going to get that this time around. The question is, what is going to be the trigger point? Is it going to be actual rate hikes, which may not come until 2023, or will it be tapering, which will probably be announced at some point over the next month or two and probably won't start till early 2022? So that's a question in my mind. I don't think we're going to have a year-long period of weak gold prices as we await the first Fed rate hikes, but I do think we'll probably have 2 to 4 weeks right now as we still have some of this murkiness in terms of Fed messaging.
That's really interesting. You know, we hear that we're in these unprecedented times right now with all the money printing that's going on, and of course with COVID still going on, but you would draw some similarities to what we saw back in December 2015 and how that played out?
Yeah, it would, because December of 2015 was the downslope of the Fed's last reaction to the last crash. And of course, everything is unprecedented until we get to the next crisis. Then it's even more unprecedented, where the Fed then takes everything it did before, doubles or triples or trebles it or whatever, breaks all the records that it had set in the last crisis, and then comes up with some new ideas for supporting the economy on an ocean of liquidity. So right now we're in that phase where the Fed is trying to normalize things just like it did last time, and pretty soon it will realize that it will have to abandon that because the markets are addicted to not just easy money, but ever easier money. Now, one of the distinguishing characteristics of what we have been going through recently is that everything is moving much more quickly. Post 2008, the Fed took 4 to 5 years to exert the kind of quantitative easing that it accomplished in 4 to 5 weeks during this COVID crisis. It also went directly to zero, did not pass go or anything else, just went directly to zero immediately as the crisis kind of erupted. But one of the things that people tend to forget is that the Fed had actually begun quantitative easing to really a significant degree well before COVID, starting in late August, early September of the summer previous. They had actually accomplished hundreds of billions of dollars of quantitative easing, and that's with no real evident crisis, but some type of friction in the pipeline, the banking pipeline behind the scenes. already had prompted them to start quantitative easing, not along the entire rate curve, but in certain sections of it and to some degree.
Okay, so definitely we've got some things to watch going on with gold. You've told us frequently before that if you like gold, you should also like silver. So I want to touch on silver a little bit. We saw its retail side in focus earlier this year, or precious side, as the retail crowd got very excited about the silver squeeze movement. As we've moved on into the rest of the year, do you see silver's precious drive or side or industrial side being more of a driver?
Well, just to clarify, I've always said if you like gold, you should love silver because it outperforms gold significantly in the kind of bull market that is money-based, monetarily based, concerns about the depreciating value of fiat currencies. And that's precisely the kind of long-term bull market that we find ourselves in right now. So silver should very significantly outperform gold. And I do think that everyone needs to have a healthy allocation to silver as well as gold. As far as the industrial drivers for gold, I have a somewhat controversial view among my fellow gold and silver bugs, and that I completely discount the industrial usages for silver. If silver was, if its value was based upon its industrial usages, it would be selling for well less than, say, $5 a pound. Everything else and above that is due to its monetary value and its perceived monetary value. So I think that really, that factor overwhelms anything else for silver. And it's really the only factor you need to be looking at in regards to that metal.
Right. And as with gold, with silver, we have seen investors be a little bit disappointed in this year's performance. What's your advice for investors who are feeling that way? Because I see all the comments on our YouTube channel and on the site.
Yeah, and everything's disappointing. Gold, silver, the junior miners, it all has been somewhat disappointing. And, I've been through a lot of cycles like this before. I keep trying to keep my emotions in check and not let it get me down. And it's even for as long as I've been in these markets, it's still hard to do. But we do need to still focus on the bigger picture. The time to worry about where the silver price is or where the gold price is or the prices of our junior mining stocks is when things are really going very well. That's when you have to focus on portfolio management, where to take some money off the table, et cetera. But gold and silver primarily function themselves, the metals, as portfolio insurance, wealth insurance. And that's one of the things we need to remember. Unless you're actively trading in the markets and leveraging those moves, then you really shouldn't be concerned where the gold or silver price is in and of itself, but rather how those prices are affecting your more leveraged investments, either in the metals themselves or the junior miners. That's where we worry about it. And it's not so much where the price of gold or silver are at any point in time, but where they're headed and how quickly. And that determines the sentiment in those other markets. And right now, as you say, it's just been sideways. But this too shall pass. I think longer term, the longer term picture is still very bright, very bullish, and we need to keep remembering that.
Right. And you mentioned the juniors, which is, of course, another topic that I'd like to touch on with you. Are there any successes or surprises that you could mention this year in your portfolio or as you look around the market? I know we've just been talking about everything going sideways, but if there's anything you could share there.
Well, right now I am focusing more on the exploration plays. The labs are still somewhat backed up, but we are getting results in from a number of companies that are drilling in the northern latitudes, as it were. So I like some of the exploration plays right now. Once my outlook on the metals brightens a bit, and I think that's probably, as I mentioned, 2 to 4 to 6 weeks away, if things play out the way they are, then I'll try to move more into the resource-rich companies, the ones that are more optionality plays that have a lot of gold or a lot of silver already identified and have been suffering as everything else has in this long bear market in the mining sector and maybe undervalued and primed to really respond to a rise in the metals prices. But I think I'm probably a few weeks away from that.
Okay. And, last year we heard a lot about the juniors being able to raise some money. This year they have been out exploring. You mentioned the labs are backed up right now, so that seems to indicate a lot of activity. Are there any regions that you've seen come to the fore in this exploration season?
Well, right now it is the northern latitudes, as it were,
Mhm.
and that would entail, there's a lot of activity in the Golden Triangle still, a bit in the Yukon. Those are typically the places you look at, areas of Alaska, et cetera. But we are following closely some of the exploration plays in the Golden Triangle, and I think has historically been, of course, a very active area and an area where you can find, I have gotten some great discoveries, and I think there's more coming. We're going to know a lot more about that over the next couple of months as these drill results this year, like we've seen last year, are going to start extending well into the fall and even into the winter.
Okay, so everybody right now in precious metals is so focused on prices. Are there any trends beyond that that you're seeing that people might not be noticing as they hone in on what's going on with the levels of price?
Well, I think one of the things we have to look for, of course, everybody looks at the paper markets and the commitments of traders, et cetera, and we see the short positionings coming down in that area among the commercials, and we see the long positions coming back from the speculators, the managed money. So that's somewhat helpful from a structural standpoint. I think one of the things that is just developing right now is central bank buying and international buying of the metals. And we see China really stepping up their purchases recently, both domestically through private purchases and through official imports. We see Russia still doing that. We see some other nations who are buying gold. Brazil famously made a purchase addition of gold to its reserves recently. And just now developing, we're seeing actually private companies buying gold. We have Palantir, of course, the software company, backed largely by the noted libertarian Peter Thiel, purchased some $50 million worth of gold, which is, given its amount of cash that company has, minor right now. But I expect that in particular to increase for that company. But in general, I can see that being a trend and people recognizing gold as an alternative currency. It does not have to go through any legal avenues before you can use it and accept it as currency and trade for products and services. So I think we may see more of that as people realize that, well, hell, we had a cryptocurrency here all along, and it's called gold and silver as well.
Right. And we do always seem to hear that we need kind of those more generalist buyers to come into the market to get a little bit more movement. So for you, would that be an indication of those generalist people coming back into the market?
Yeah, that's huge. That could be huge. The gold and silver markets are very small and relative to other asset classes. And I think that you'll see and been seeing actually some shifts, small shifts still in allocations, but shifts in very large pools of money toward gold over the long term. Now, Bitcoin and the cryptocurrencies have stolen a lot of that kind of demand, but most of that theft, as it were, has been from the speculative demand for the metals, not so much for the long-term allocation shifts, the portfolio mixes. And I think we're going to see more of that from big institutions as we go on, because it's fairly apparent now to just about any informed or insightful observer of the global economy and trends that we're headed into periods of great uncertainty. And nobody can really predict the precise path we're going to take, but it is pretty safe to say that you're going to want to own these anchors of value like gold and silver going into this period ahead, as the central banks try to normalize and then subsequently realize that they can't normalize without crashing the house of cards in the financial markets that they've created. So a lot I see that being a trend that's going to reemerge and kind of emerge in a private level as well, on a corporate level going forward.
All right, always important to talk about what's going on in gold and silver, but I know you're keeping an eye on the wider metals market as well. So I'm curious to know if there's any other commodities that you feel bullish on at this time.
Well, base metals in general, uranium, I like. The whole spectrum of commodities has experienced many years, decade plus period of underinvestment in exploration and development. And in normal times, you see that come and create higher prices. One area I'm particularly excited for over the next 3 to 5 years is copper, because we've seen that happen in copper. These supply constraints come about because of these very long-term underinvestments and malinvestments in exploration and development. But that's coming up against perhaps the steepest growth curve in copper usage that we've ever seen in light of the electrification of transportation, electric vehicles, the grid that will power those electric vehicles. So copper demand is about to soar, is already soaring, yet we're seeing severe supply constraints that would take many years, decade plus timeframes of much higher prices to rectify. So that's a long-term play that I really like, and there are a lot of undervalued junior to mid-tier copper plays there that still in development that I think are extremely undervalued in light of these secular trends.
Yeah, copper is definitely one that seems to be gaining steam.
Mhm.
But going back to what you said about, many commodities are facing these types of circumstances right now. We've heard some people start talking about this commodities supercycle idea. Where do you fall on that idea?
Well, if you talk about a commodity super cycle, you have to talk about global economic growth, and in particular, China. Now, the early 2000s was perhaps the most profitable period for not just metals investors, but mining stock investors and junior mining stock investors. And it was really an 11-year series, with some ups and downs along the way. But if you held throughout that period, you would end up multiplying your investments, more than 10 times over. But if you're able to trade along those ways and that trend and take profits near the top, take profits in a lot of these junior mining plays and redeploy them, you could do much, much better. But that whole cycle was driven, yes, largely from some easing and some reliquefaction of the US economy and central bank policy, but a lot of it was driven by the growth of China. And whereas you can make some arguments that China may be a bit overextended, maybe still struggling because of the pandemic and a lot of other things, it's important to also note that the Chinese economy is about 3 times the size that it was back then. So even a 1% increase in demand or in economic growth for China equals 3 times what we saw earlier in the 2000s. So it's still going to be a major player in a major demand sink for commodities of all sorts. And I think copper is going to be one of the primary beneficiaries of that.
All right, you've given us a lot to think about a few commodities. As we finish up, I want to ask you about the New Orleans Investment Conference. Is coming up in a couple of months. That means there's plenty of time for people to get set up to attend. So what can you tell us about that, and especially how you're going to be handling it during this time?
Yeah, we're doing it as a hybrid event, but I'd like to stress that we're having an in-person event, and we're going to be the largest retail investment conference and the first that focuses on metals and mining as well, to be in person. So everybody's very excited about getting back together. We have just had a number of companies breaking down our door figuratively to get into the event. So the exhibit hall is going to be packed. We have a lot of people very excited from an individual investor standpoint to get back anywhere in person, to get back to New Orleans specifically in person, and even more specifically, excited to get to hear our speakers, because Charlotte, I have to tell you, the speaker list this year was my wish list, my dream team. Everybody that I wanted to come, with the exception of really just 2 people that I wanted to get there that I was not able to get because of conflicts. But we've got Ron Paul, we've got James Grant, we've got Jim Rickards, Danielle DiMartino Booth, Jim Iorio, Doug Casey, Rick Rule, Dave Collum, Dominic Frisby, Tavi Costa, Lawrence Lepard, George Gammon, Brent Johnson, Peter Bookvar. I mean, the list goes on and on for dozens and dozens. And I encourage everyone who may be thinking about going to the world's greatest investment event to go to our website at neworleansconference.com and look at our speaker list. And if you don't recognize one of the names, Google them, go watch what they've been writing about and what they've been saying, and you'll immediately see why they've been invited. They're all extremely smart, very insightful, and the leading thought leaders in the investment sector today. And you did say there's plenty of time, but I have to also stress that we have a strict room block at our hotel this year. So the hotel is sold out outside of our room block. So there is some urgency for people to go to our website and register. And there's also a complete money back guarantee. We're obviously cognizant of what's going on with COVID and Delta and people's concerns, but it makes all the sense in the world for you to go ahead and lock in your place while you still can, because you can always get your money back or switch to a virtual component if you don't feel safe in traveling. But first off, claim your space here in New Orleans, because it's going to be really a blockbuster event that people are going to be talking about for many years to come. And you want to be in that number.
Sounds amazing. I hope they will open up the border so we can come down from Canada and check it out. I hope everybody else will do as you said and go to the website and take a look and see the speaker list and maybe sign up. I think that's all from me today. Thank you so much for coming on to talk about what's going on in the market and to share about the upcoming conference.
Thank you, Charlotte. It's always a pleasure. Thanks so much for the opportunity.
Great to see you again. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Brien Lundin with Gold Newsletter.